Thanks for giving me the chance to tell you about Prime. Not a lot of time. 10 minutes is barely enough to get acquainted with this new company. We entered the market, as Gwen said, this Tuesday. That came after 6 months of investigating the asset Los REYES, which we purchased from Minera Alamos, gaining regulatory approval for the transaction and closing the transaction. The strength of the asset and market timing brought a great group of people to put this together, and so I'll tell you a little bit about that. So first of all, our plan. It's a 2-year plan to take Los REYES and put it into production. The reason we think that we can do that quickly enough is because there's been over $20 million spent so far on geological, engineering, metallurgical, environmental, and process studies. In addition, we have a shareholder partner. Minera Alamos owns 17% of us. Minera Alamos is currently planning to put Santana into production and shortly thereafter Fortuna, both in the same geographic region. Same process, same plan. That will help us. In addition, we've done 3 different studies on the asset, and it's a low capex plan. This project can be put into production for under $14 million. And we have a technical team that's got significant history, and I'll get into that. So why Los REYES? Well, there's 380,000 ounces inferred and 155,000 ounces indicated, another 10 million ounces of silver that sits in open pit, heap leachable oxides. Only 7 kilometers of 17 have been drilled off, and there's plenty of upside. And more importantly, it's close to population, power, and water. So our conceptual plan is to build a low capital cost, contract mine, contract crush, simple heap leach with on-site loading of carbon, and then off-site stripping of the carbon. As I mentioned, it's about a $14 million capex. We do not plan to pour our own doré there. We plan to ship carbon out of Mexico, have it stripped in Nevada or in Idaho, much like El Castillo does and McEwen Mining at El Gallo. That's sort of a conceptual site plan that we've drawn up. I'll get briefly into that in a couple minutes, but I'll tell you a little bit about the team. And so the strength of this, as I mentioned, the strength of this asset brought some significant players to the team. So a few months ago, I reached out to Dan Coons, and I had done some work with Dan Coons' boss several years ago, and so introduced it to him, and he did a couple months of research on it. His whole team went through all of the geology, all of the engineering, went through all our constating documents in the company, 3 years of board resolutions, and agreed to come on. I asked him if he would be CEO, and he said, "I don't want to run around. You do that. I'll build the mine." In addition to Dan Coons, Greg Liller joined the company. Greg came from Gammon Gold, you might remember, from Genco Silver. He's built 4 mines in Mexico and several others throughout North America. In addition to those 2 gentlemen, we've got several other people that have been involved in the mining business for a very long time. And when you look at these slides, you'll think that that maybe that's going to make for a high burn rate. I can tell you that everybody in this company, from the top down to the bottom secretary, all swapped out their first year's salary into the financing that the market just completed, into that $8.7 million. Everybody in this company, so I don't take a salary, everybody in this company that takes a salary swapped out their first year. They're all aligned with shareholders. What's special about Los REYES? It's 1.7 grams oxide sitting on surface. In addition to that, there's a 3.4 gram starter pit. There's 500,000 tons there that will pay back our capital costs in under 6 months. We expect to recover 76% of the gold and approximately 24% of the silver. We believe that we can put it into production in 2 years. So I guess why Los REYES? Well, so several people, successful geos and industry veterans, have suggested that Los REYES can hold 1.5 million to 2 million ounces of gold. Doug Ramshaw, who's here, will tell you the same thing. That's why it was in their portfolio. Our timing was perfect. When I approached Doug in February to buy this asset, they had about 1.8 million Canadian in the bank and had $1.5 million US payment due to Vista a month later. And when I suggested I'd put up the money privately for that and we'd figure out a way to do the transaction, he was in agreement. We picked up this asset. It has the potential to host a lot more gold. But for me and the team, we have a lot of our own money at stake here. We don't feel like spending another $5 million in exploration to add another 500,000 ounces to get that million ounce mark that everybody wants us to get to. There's no point in that. We can put this into production in 2 years, and we can use cash flows to pay for that future drilling. As I said, there's 17 kilometers of strike, and only 7's been drilled off. At our plan, we can produce 65 to 70,000 ounces annually. That's a 7-year mine life with what we've got there now, and we're very comfortable with that. There's been, as I said, there's been studies done on this project. There is a 4 million ton and another separate 2 million ton leach pad that was designed in 1998 by Northern Crown and John Brock that worked at 325 gold. Gold subsequently fell in 1999 to 252 at its low, and the project was shelved. In 2012, Vista did a PFS level study again, but this time as a full CIL plant, full tailings compound, full grind, $120 million capex on an 840,000 ounce gold resource and then 160,000 ounce gold equivalent silver ounces, so about 1 million ounces AU equivalent. But $120 million capex, they were busy breaking their pick at Mount Todd in Australia and shelved it again. It's been sort of the ugly stepsister of several companies, and it's been overlooked for 20 years, executing the plan. When we began to trade on Tuesday morning, Dan Coons, Greg Liller, and my VP of Exploration, Bruce Kindland, left for the project. First time on site, except for a site visit in March. On Wednesday morning, they met with the mayor of Cosalá, a town of 9,500 people. The following day, they met with the president of the local ejido. And if you're not familiar with operating mines in Mexico, you need to get surface access rights. You need to reach arrangements, just like here with First Nations. You have to have the local ejido on side to give you surface access rights and then to negotiate a deal for subsequent production. We had that meeting, we had that meeting Wednesday with the president of the ejido. Yesterday, we met with the entire population of the ejido. 70 members were present. They all voted in favor of our development. We are entering that property Monday morning with 2 D6 cats to open it up and a team of 50 surface workers to begin our process. One of the interesting things about Los Reyes is that those resources that exist were calculated using 495 drill holes, but there's never any surface geology done. None of the known resources wireframes stretch to surface. It's a 200-meter thick zone, and the top 40 or 50 meters is considered in our resources as waste rock. We're going to go across and trench all those, and we will have data points to fill in the resource. We will get up-dip ounces initially. I got to get going fast here. So I'm going to go through a couple quick slides and tell you that here's our plan. Starting Monday, we have a crew of 50 going in, 2 D6 cats to open up and a crew of 50 to go to work. We are going to begin immediate surface exploration, trenching. We will use some of that trench work for some columns. There are already columns done from the 90s, but we do some more column testing. We'll do some environmental review and begin a surface exploration program. At the same time, we will be applying for drilling permits. We hope to get those in 60 days. Within 60 days, we will begin geotechnical drilling and some condemnation drilling. At the same time, we'll be remodeling the resource, which we've defined as historic. We will introduce a new resource to the market late November, early December. We anticipate that it's going to be larger than the current resource there. At the same time, we begin our negotiating with local contractors for bids on our contract mining, contract crushing, and all work on the mine site. The intent of that is to provide a PFS level PEA in the second quarter of next year. And what I mean by PFS level is within 10 to 15% of all costs. That's about all the time I've got. The next 1 year from now, you'll see us here, and by then we will hope to have announced a production decision, put it into production, And that'll take the second 12 months of this to go to production. Anticipated profits sometime 30 months out. Please come and see me. Thanks.